please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, those are our top stories. Let's invite our two experts this afternoon. Vijay Chopra and Rajat Bose are here to answer the many queries that are coming in. Gentlemen, good afternoon to you. And the first query actually comes in on Reliance. And it's strange because it's Yatin Joshi is writing to us from Karnataka, but on his mind is Reliance Industries. All right, Yatin, he says he holds 240 shares of Reliance, which he has bought at about 1,000 odd rupees 2 years and 5 months ago. He's a long-term investor and wants to know what he should do. So he's making a bit of a loss, but today Reliance, of course, has launched the upgraded JioPhone 2, the fixed line broadband service. So all in all, let's see how that's going to stack up in the long term. Vijay, what would your advice be for Yatin? He's a long-term investor. Should he remain invested?
Absolutely. I would say that he should remain invested. I have gone through the entire AGM, and there are a few startling facts. One, Jio, the way it has grown to about 22 crore customers within a span of 22 months or 21 months. So it is something stupendous. They are talking about Jio Fiber, which is going to redefine the way people live in India. They are talking about an agriculture platform, an education platform, a media platform. So Reliance, prima facie, this is the first AGM where petrochemical business and other oil and gas businesses were sidelined completely. And for more than 70 to 80% of the time, they were talking about how they can, reach to the nooks and crannies of the countries. All the villages are going to be connected through fiber. And I think that this is a redefining moment. They have actually, completely changed the way telecom industry used to work. And now I think there's going to be a disruption in the way fiber and home internet and office internet is going to be used. So these are redefining moments. One more thing Mr. Ambani said was, this is the first year of the golden decade. So they are probably talking about doubling the revenues in the next 10 years, which is a very forward-looking statement. So if there's somebody who's a long-term investor, I think she should be invested. There might be some kind of a correction. The stock might come back to maybe 930, 940 levels because it has run up recently in the last 1 week in anticipation of the AGM. But yes, I think long-term investors should accumulate the stock on dips. And I'm quite hopeful that 1200, 1250 is quite possible on Reliance. So thumbs up from me. I think that, they are going in the right direction. The petchem business is also doing good. The numbers are reasonably okay there as well. The profits margins are good. So I would recommend a buy on dips.
All right, a buy on dips as far as Vijay is concerned. Rajat, technical view on Reliance for the long term. Currently, the stock is above its 100, 200 day as well as 50-day moving average, just below its 20-day moving average. On the charts, how does Reliance look?
Before I offer my view, the disclosure from my side is that I'm a long-term investor in Reliance, and it's already has given me 100% plus returns, holding it for quite some time. I mean, for the last 2 years, it has given a very good return that way. Having said that, I would say that yes, for a long-term investor, I would definitely say that it's a hold. And it is in a steady uptrend. You may not see fireworks immediately. For that to happen, the stock needs to sustain itself above 1030, 1050 supply zone. Till such time that level is cleared, you will see some consolidating price action. But once 1050 is decisively cleared, I think the kind of run that you saw in 2017, part of that could be seen again. So having considered that, I would suggest a hold, and I am also planning to hold. My target for the long term over the next 3 to 5 years would be something like 1600.
All right. With that, we'll give a disclosure from our side as well. Reliance Industries owns Network 18 and TV18, the companies that operate the channel that you're watching and you love. With that, we'll move on to the next one. Akash Shah, writing to us from Gujarat, holds 3,000 shares of HDIL. Well, at 60 rupees for the last 1 year, long-term investor wants to know whether to hold or sell. Vijay, HDIL sitting on a fair amount of loss, nearly 66% of his capital eroded in the last 1 year. What would you recommend?
I would recommend an exit on rallies because I really don't think there's a case. If somebody wants to stay in a real estate company, look for a company which is debt-free. And this I've been, iterating for quite some time. Debt has completely ruined the possibility of existence of such companies. And post RERA, I think it is becoming difficult by the day for most of the developers to stay afloat. So I would say, if you are in real estate, you should stay in debt-free companies. There are options like Ajmera Realty, like Oberoi Realty. I think down south there are good options like, Brigade Enterprises is good. I think Prestige is a good option. Even DLF at these levels doesn't look that bad. But HDIL is a strict no-no. I would say exit on rallies, and I don't see much hope in HDIL per se. There are other options in the market. Pharma looks good, IT looks good, but yes, one should be out of HDIL for sure.
All right, so realty itself not so bad, but HDIL definitely not the pick of the pack. So what about financiers then? SP Raju writes to us from Bengaluru. He holds 500 shares of HDFC for about 6 months now. He's a long-term investor and wants to know what he should do. So he's bought in just about 6 months ago, Rajat, and I mean, clear, this is a no-brainer, right?
It's kind of a no-brainer in the sense that if you look at the quarterly chart, since inception, HDFC on a semi-log scale, on a quarterly chart, it shows a steady uptrend. So you have to have patience. Yours truly did not have, so is ruining the fact that he didn't. But the point is that any patient investor has been amply rewarded by this stock, and I would suggest one should continue to do so. And this guy claims that he's an age-old, he's an aged person, he's a retired person, so for him, he has chosen a good stock. He should continue to hold it.
Right, you've chosen a good stock, continue to hold it. 6 months ago, the price was close to around 1725 rupees, still making 200 rupees a piece on HDFC Limited. Continue to hold for the long term. With that, let's keep an eye out on individual stocks. ITC continues to support the markets on the one end at the high point of the day, but we're seeing some declines come by in Infosys as well as L&T, which has moved lower as we speak and currently sitting closer to the low point of the day. NTPC2 at the low point of the day. Some choppiness, the Nifty absolutely flat. With that, we'll slip into a short break, come back, we'll focus on some more stocks and queries as we return.
Hi, welcome back. You're watching Your Stocks. Well, let's get back to answering some of the stock queries that are coming in. Our two experts are here with us. The query is on Power Grid. We have Kannan P, who has written to us from Chennai. He holds 500 shares of Power Grid at 200 rupees. He bought it about 2 months ago. He's a medium-term investor and wants to know what he should do. Well, for now, he's making quite a bit of a loss, actually. Rajat, you think there's any reason for him to remain invested, or should he just bite the bullet and perhaps put this money to work elsewhere?
I quite agree with you. I mean, agree with the last part of your query, that is, or rather the statement that you made, that it's better to actually bite the bullet and switch to something else. If you look at the monthly chart, you will find that there is an evening star-like formation. That means this is basically a three candle pattern, in which the first candle is a bullish candle, in which the stock moved up from something like 190 to about 210. Then in the succeeding month, that is in the month of May, 216 and 201 low. And last month, that is June, it fell from a high of 207 to 183. So this shows that the sentiment has totally changed, and it is, on the daily chart, it is showing a strong downtrend. So it would be better to actually exit this stock and switch to something else and do not stay invested. And I, for one, am suggesting my clients as well as people that any weak stock that you are holding, unless you have the guts to hold it for a very long period of time, exit, hold money. Maybe at a later date you will get much better opportunities at much more attractive prices.
All right, Rajat, point well taken. With that, let's move on to the next one. Vikas Kaushik writes to us from Kolkata, holds 3,000 shares of Amtech Auto at 21 rupees for the last 1 year. Long-term investor wants to know whether to hold or sell. Well, Vijay, it's again one of those high debt companies, part of the IBC as well. People were thinking, you know, there would be resolutions, but the big question was, will equity shareholders get anything? If you take a look at all of these stocks, they're down anywhere between 30, 40, some even 80% from the start of this year. Do you think it makes sense to hold something like an Amtech Auto at 21 rupees, losing some money here? And perhaps again, like Sumaira said earlier, bite the bullet and put the money somewhere else?
Well, few points here. You know, one, I am very wary of debt-ridden balance sheets, and I really don't see how you know this debt would be serviced, because market situation also for kind of mid-cap companies is very challenging. Amtech Auto was in a good spot few years back, but the kind of acquisitions they did, and you know they hived off a business. I think Wendy's have bought back the stake they had. But again, you know, the debt is too large to handle as of now, and any resolution would take time, and turnaround would take time. Although there is a very bleak chance that the company comes back very strongly and we see 21, 22, maybe 25 odd levels, but that is an if I can say so. So rather than you know, staying here you know, and hanging on a rope of hope, I would say that, you know, it's better to get into some other stock and try and revive the portfolio. Maybe a pharma company could be a good option, and you know, and there are chances of the money coming back. But I think that, you know, this rope of hope can disappoint also. So I would say exit on rallies and get into some other story which has the potential of paying back.
Yeah, and perhaps you know, the investors should have sought out this advice a while ago. It might already be a bit too late. But we're getting in some exclusive news break. Sources suggest that Sadbhav Engineering is embarking on a huge monetization of its infra subsidiary, that's Sadbhav Infra. Nisha Podar brings us these details. Hi Nisha, what can you tell us?
Thanks for that, Sumaira. Of course, sources with direct knowledge share with us that Sadbhav Engineering, which is the parent company of Sadbhav Infrastructure, is looking at monetizing its stake in the company. In fact, sources with direct knowledge have shared that Sadbhav Engineering has mandated investment bank for the sale process and to evaluate all the options for monetizing Sadbhav Infrastructure, which is a listed subsidiary of Sadbhav Engineering, in which engineering company, the parent company, holds about 68% stake. Now, what we do gather is that for Sadbhav Engineering, there are two options open. They are open to selling a substantial stake in the company infrastructure, which could be even up to 40% stake if there are interested buyers coming in. Remember that the investment bank, which has been hired for this particular sale, has reached out to several participants, several infrastructure investors in the country as well, who have been operating here, the kinds of Macquarie, Cube, as well as Brookfield, for this particular deal. But they are exploring two-pronged, you know, sale process. First, either there is interest in buying out stake at the parent at the subsidiary company, which would be sold by the parent company, or else sale of a part or whole of the asset portfolio, which has 12 operating assets under the infrastructure company. All in all, the whole idea is to monetize the stake, to reduce debt, and to infuse the rest of the funds that are gained in putting in and infusing into the future growth of other projects as well. So the most important point, infrastructure stake sale by Sadbhav Engineering, that's the key to watch out for the company. When we reached out, said there's no such plan of selling stake in infrastructure company, but selling assets is part and parcel of churning the portfolio for the company as well.
All right, Nisha, thanks a lot for that. Meanwhile, Sadbhav Engineering up about 1.5%, some decline seen on Sadbhav Infra. Vijay, this space, what's your view here? And especially post this news, do you think Sadbhav Engineering or Sadbhav Infra are investable or tradable options here?
Well, if you talk about infrastructure play, I think I'm quite convinced over the infrastructure story which is going to be unfolded in India. It's not a 1 or 2 year story. It is irrespective of the governments which are here. Infrastructure would be something which is going to be there for the next decade or maybe 2 decades or so. You know, there are large projects which are there still in the files and they are still to be implemented. So I think that companies like Sadbhav Engineering should be benefited. Although, you know, the markets have been very brutal on all the infra companies. We have seen the way they've been carnaged. But I think that this is good news, and I would, in case of Sadbhav especially, I think that there is a case, in case of a positive news flow, the stock can go up. So I would say that, you know, both the companies look good, but with a very short-term perspective. And I would say when there is a deep correction, buy into good, less debt or maybe zero debt infra companies. There are chances are very low that, you know, these companies do not have debt, but still, you know, the comfortable debt levels are very important in infra companies, and I think that Sadbhav has a case where, you know, we can see a spike of 5 to 10%.
All right, on that note, let's take a quick break, come back in a bit. Lots more queries lined up next. The two experts will stay with us, so do stay tuned.
Welcome back. While the Nifty is absolutely flat, you need to keep an eye out on the Nifty Bank just ahead of the weekly options expiry. That one's at the high point of the day. While there is a sharp fall in IDBI Bank, that doesn't account for much in the Nifty Bank. Watch out for Yes Bank at the high point of the day. And the biggest weight out there, we have HDFC Bank too, which is at the high point of the day, taking the Nifty Bank higher. It's up about 150 points now. Just an hour from now, we will have the weekly options expiry. So that trade could perhaps be playing out. With that, we'll move on to our query. We have Sunil Kumar writing to us from New Delhi, holds 400 shares of ITC at 280 rupees for the last 4 years. Long-term investor wants to know whether to hold or sell. Vijay, ITC, everyone keeps talking about the value bet that it is trading at a sharp discount to all the other FMCG players, including HUL. But the earnings growth, that hasn't come by in the last few years. What do you think ITC is, a value bet or a value trap?
Well, I don't think it's a trap at all. If you remember a few years back, you know, HUL used to trade at around 200 to 300 range, and for a number of years it was trapped somewhere there. And suddenly we saw that within a year, you know, from 200 it rose to 900. So I think that, you know, this is kind of a story which is going to unfold in ITC. I think there's a lot of value in all the businesses they're doing. The hotel business is doing well. Their paper business is doing well. The FMCG business, which was a cash burner earlier, it has started looking up. Apart from the cigarette business, which is definitely susceptible to some kind of a taxation issue. But I think that if you look at the overall picture, it is a well-diversified company. In the last 100 years, we have not seen any corporate governance issues coming up. So there are times when, these quality companies, they stay silent for a long time, and then we see a sudden spurt coming. So I think that if somebody is a long-term investor, 4 years the person has already waited, I think he should wait for another couple of years, 3-4 years. The stock can, start running anytime, I would say. And, we can see those 350, 370 levels also coming on the stock. So definitely a hold. And in such times of volatility, I think that stocks like ITC, they give you a lot of buffer, a lot of cushion, and such stocks should be there in the portfolio.
Gentlemen, thank you so much for your advice this afternoon. We'll wrap up your stocks with a quick reminder that tomorrow is Friday. So that means it's ladies special here on Your Stocks. Do send us all your queries. Log on to CNBC TV18.com. Do stay tuned. Closing bell will take you through the last hour of trade.